Today in this video, we're going to continue our little series about how to buy a house in 2026 and beyond. And today we're going to talk about your money. Check it out. Hi, I'm Rhonda Burgess, and I'm a mortgage underwriter and real estate broker here in the Nashville, Tennessee area. And I've been an underwriter for nearly 30 years. So this video is going to be more for my younger people. Okay, I think it is. It may be for my older folks too, but especially for my younger people, because I think for a lot of people, we just assume that young people know exactly what we're talking about. And you may not know what we're talking about at all when it comes to your finances, because it's not like you're taught financial literacy in school anymore or anything like that. Okay, so what I'm going to talk about first is your money. You have to have money. You have to have an income in order to buy real estate. Okay. I get a lot of people from time to time that will say, I only get SSI. I only get Social Security. That's not going to be sufficient. It's not going to be sufficient. Or you're going to need a cosigner who has, a substantial income, meaning they work a job, or maybe they get VA disability or something like that. But you're going to need income to be able to buy a house, to buy real estate. Okay. So that income needs to come from your employment, meaning you need to have some type of employment, whether you're working for a company, working for someone, or you're self-employed. There's got to be some income coming in. Okay. One thing I want, especially my young people, to do is, I know you work these jobs and they'll give you like a pay card, like an ADP card. They deposit your money onto that card. That's how you get paid, whether it's weekly, bi-weekly, however you get paid. Please get that money off that card and have it go into a checking account. I want you to go to a bank and get a real checking account, not Chime. Listen, the reason why I tell y'all these things is because I've underwritten for a lot of different lenders, and each one of them can have their own, requirements. But I'm going to tell you like this. I know, we've got Cash App, we've got Zelle, things like this to move money. And that's all it is to move money. When you're trying to buy a house, you're trying to buy something substantial, they want to see that in a checking account, period. There are some lenders who say they won't accept Chime. They won't accept Cash App. I have a Cash App card. I run all my stuff through Cash App. A lot of lenders don't like that, because remember what I told y'all about underwriting. It's all about mitigating loss. It's about mitigating loss. Okay. So when you get paid every week, every 2 weeks, and your money is deposited into a checking account, the lender, everybody can see where the money moved. It came from your employer, whether that's yourself or not, but it came from your employer and it went into your bank account. Get a checking account. Get a real checking account. Do not come with just, I just use the little pay card and I do, and I have Chime. That you're making it harder on yourself. You're making it harder on yourself, because if that's all you have, that's the only way you have to prove that you receive income, things like that. You're making it harder on yourself, because there's some lenders that just won't take that. They just won't take that. And see, what you need to understand about Cash App and Zelle and everything, that's to move money back and forth between people normally. Okay. So if I'm needing to calculate your income, they don't want to see all these Cash Apps coming in and going out. That's putting up red flags. Get you a real checking account, because you're telling me you work for somebody. Oh, you work at this company or whatever you working, but I see all these cash apps from Minnie Mouse 123, or whatever these screen names and everything. No, because see, that looks like money laundering. That looks like money laundering. I know a lot of my younger viewers, y'all, you may have been children. Like my son was a child. My son's birthday is September the 11th. Okay. And when the September 11th tragedies happened, my son was, he was born in 91, and that was 2001. Okay. So, I know a lot of y'all don't even remember that. You may not even been born, or whatever. But let me tell you something. What came out after that was the Patriot Act, where we have to keep an eye on and report where money comes and goes, because it was, they believe that the hijackers, they had been receiving funds illegally. There have been a lot of money laundering. So that's one reason why we have the Patriot Act. And so you got to document where that money is coming from, where it came from, where it's going out to. Okay. So get you a real checking account. Go to the bank. If you don't want to go to a brick and mortar bank where you live, go online. But get a real checking account. You can go to Capital One. They got, they don't even have branches. I've been with Capital. I've had a checking account with Capital One for years. I've had an account with Regions Bank in, I'm in Nashville. I'm in the South since I was 17 years old. I had an account with them when they was First American. I know I'm telling my age, Lord. They was First American. Then they became Am South, I believe. And then they was Union Planners when they merged with the people out of Memphis, and then they became Regions. But when I tell you, I've been here a long, long time. Okay. And I think, we may have done a disservice to some of our young people that we never, that you were never set up with a checking account, or you were never told how to use a checking account and what a debit and a credit is. Listen, the money that you put into the bank account, and then you have your debit card. When you use your debit card, it is pulling money out of that account, whatever money you had in there. That is totally different. A debit is different than a credit. If you have a credit card, that means that an institution, a lender, has entrusted you with a line of credit that you can use. You can use your card, Visa, MasterCard, whatever. You can use your card to buy things on credit, but you have to pay that back. Okay, still on the talking about your money in your checking account. Get you a regular checking account where you can get statements. You don't have to show a printout. We want to see a statement. Another thing, when you get that checking account, if you're going into overdraft every month, you're using your overdraft like a line of credit to sustain yourself, to keep your account from being overdrawn and keep it going real negative, you're not ready to buy a house. You're not ready. We look at that. We look at your bank statements. If you have more than 2 overdrafts a month, that's going to be a no-go. That's going to be a no-go. So the same thing. If you're hitting that overdraft protection, your overdraft line of credit every day, every week, every other week, you got 2, 3, 4, 5 overdrafts a month, you're not ready. And you're not going to get approved. You're not going to get approved. I did a video way back when I said, make sure that you have your money going into one account. Some of y'all like to spread it around, have 15 different accounts. That's a hot mess. It's a hot mess for underwriting. And I'm going to tell you, the underwriter, remember, it's all about mitigating risk. But at the end of the day, you got a human looking at your file. Okay. Even though the desktop underwriter may say, okay, all right, they cool. Yeah, they questionable, but yeah, let's roll with it. It's still got to be looked at by a human. And I'm not listen, I don't know any other underwriters who gonna sit up here and piecemeal together where your money goes and you got it spread out over 10 different accounts. I'm not finna do that because you're slowing me down. You're keeping me from meeting my quota. So then I'm finna start nitpicking. I'm gonna be like, okay, then you need this, this, and this, and all this. No. And your file gonna go to the bottom. Your file is gonna go to the bottom. I'm not finna deal with putting all this together. Have your paycheck and the account where you're gonna pay your closing costs and or down payment from. That should just be one account, two at the most. We don't want to see 15 different accounts because you put $50 here and you put $100 there and you do this, you do that. No. Because you're relying on somebody else to sit there and go through like months worth of bank statements to figure out where your money is going. That looks like money laundering. I'm just telling you, it don't work well. So keep all your money in one or two places. Here's a little tip for you too. You know, when you do a USDA loan, we have income guidelines. Okay. So if you know, and we do a test at the beginning, right? And it says if you have 20% down, if you have 20% saved, so you could put 20% down on this property that you're looking at buying, right? So that means you could go conventional. That makes you ineligible for a USDA, a rural housing loan. What I suggest to you is if you know you got more than 20%, don't show me that bank statement. Meaning, because I had a young man that called me and asked me this. I'm just telling you how to get around certain things. So if you've got 20%, let's say you're buying $100,000 house. I know we ain't nobody buying $100,000, but you know what I'm saying. So if you're buying $100,000 house, 20% down would be $20,000, and you've got $30,000 in this account. You've got $30,000, okay, and you want to go USDA rural housing, and you qualify every other way, okay, your monthly income, everything, except you've got too much money saved. Then what you need to do is move that money or have a separate bank account just for that money, just for the overage. Let's say you're going, and then only give your underwriter, only give your originator your bank statement for the other account where your paycheck goes in and where you're going to have the money for your closing costs. If you're going to be over the limit, don't show that bank statement. Don't even mention that you got that money. Say, this is all the money I got in this Capital One account, okay? And you may have a Regions account over here with whatever you got in there. That ain't none of my business. I'm just telling you how to get around it. So if you have too much money, make sure you leave that off. If you're doing a THDA loan, if you're doing a rural housing loan, leave that off. But otherwise, make sure you're putting your money in one bank account, okay? And you cannot have a bunch of overdrafts. You cannot have a bunch of times when you're using your overdraft line of credit. That's not going to work. Remember, debits come out immediately, or at least they'll put a hold on it. You know how it is when you go to the gas station. You go to the gas station, they're going to put a hold on it when you're using a debit card. That's not the case with a credit card. Remember, debit comes directly out of your bank account. So if you ain't got the money in there, it's not going to work. And on that same tip, if you're using credit, you've got to pay that back. When that bill comes due, you got to at least make the minimum payment, okay? Another thing, do we trip on if you're using Affirm, Afterpay, Klarna, stuff like that? Nope. No. But what you need to understand is every time you use Klarna, I know Afterpay, and I do believe Affirm, I think all of them, they pull credit each and every time. So if you buy something from Temu or Shein or wherever, right, and or you doing a vacation and you using Affirm, okay, and so you did that in June, okay, so here comes July and you want to order something else and you want to do the four easy payments or however many payments, right, and you going with Klarna, they're gonna pull credit again. they're going to pull credit again. So just keep that in mind. I used to love using Klarna because I like to manage my money like that. You know what I'm saying? I don't want to give you my money right then. But when I figured out they was pulling credit every time, nah, that's all right. Because some things I would use with Klarna, but others I just use my credit cards to get points. They get points where I can redeem them for cash back, or whatever. So just know that about your payment options. You need to make sure that you're on top of that, okay? And do not apply for a mortgage until after you paid off your Klarna or your Afterpay. Because as long as that bad boy, let's say you're on payment, you getting ready to pay payment number 2 or 4, or if you're doing something, a higher dollar like Affirm maybe, or whatever, maybe you did a $3,000 vacation and it's going to be, $300-400 a month to get it paid off for, the next 6 to 12 months. Wait until you pay that off before you apply, because that's going to mess up your DTI. I'm going to say it again for the people in the back. Wait until you've paid that off and you don't have no Klarnas, no Afterpays, no Affirms before you apply, because those payments will have to be included in your debt to income, especially if they got, if it's a big dollar amount and you still got like 10 monthly payments to do, or 11, or, you can spread it out however you want to, but just wait until after those are paid off. And one last thing about your money. I did a video a few weeks back and I said, if you get a part-time job or you doing, a side gig, like maybe you driving Uber Eats, Instacart, whatever you're doing, if you're doing any of the gig economy stuff, don't even report that as income if you have not done it for 2 years and you have not paid taxes on that money. Okay? Don't even mention it. Don't even put it down as a source of income on your application, because it can't be used if you have not done it for 2 years. Even a part-time job, even a part-time W-2 job, if you haven't done it for at least 2 years, and or you're doing the gig economy and you have not paid taxes on that money that you have made and you've done it for at least 2 years, don't even worry about counting that as income. Just use that money towards your down payment or closing costs or whatever. Don't even put it on your application as another job that you work, unless you have a 2-year history and you have paid taxes on that. Okay. I think that pretty much covers everything I wanted to talk to y'all about income. Just make sure that your income is documented. Make it as easy as possible to document your income. Get you a real checking account. Go somewhere. Get you a real checking account. While you're there, get you a savings account. You don't and you can put money in the savings account, and you do not have to give the savings account statement when you apply for your mortgage if you don't want to. Okay? As always, thank you and have a blessed day.